Following those devastating wildfires in California tonight, this is video of the Eaton Fire northeast of Los Angeles, showing just how quickly the flames have spread. Officials say the fire has killed at least 4 people and destroyed thousands of structures. At least 1 person has died from the Palisades fire, the largest one in the LA area. And in the last 30 minutes, we've learned a 6th fire has now started just north of the Palisades. Officials have already issued evacuation orders there.
This afternoon, President Biden announced the federal government will foot the bill for the recovery in the state for the next 180 days. Some federal assistance will help cover immediate needs like food. Biden also said 400 federal firefighters have been sent in to help, along with planes and helicopters. Rebuilding from a disaster like this will take time and plenty of resources, including from insurance companies.
Gordon Severson joins us now, explaining how the destruction in California may impact insurance rates both there and here in Minnesota. Gordon?
Yeah, analysts from J.P. Morgan are predicting the fires could cause more than $20 billion worth of damage. At AccuWeather, they're saying more than $50 billion. But even if that lower number holds true, that would still make this the most expensive wildfire event in California history. And that damage could show up as higher costs for insurance.
When you look at the top 10 most damaging natural disasters ever, you won't find a single wildfire. But if the latest estimates hold true, the wildfires burning right now in California could easily crack the top 10 and possibly crack the top 3, just behind Hurricanes Ian and Katrina.
We see it as a tragedy.
Aaron Cocking with the Insurance Federation of Minnesota says the fires will certainly raise insurance rates in California. As for the rates here in the Midwest, it's a little more complicated.
What's happening in California in the wildfires and what insurance company ABC may be paying out in California is not going to have a direct linear impact on what's happening here in Minnesota.
That's because insurance rates are determined at the state level. But Cocking says the fires could raise our insurance rates indirectly.
The first is the notion of reinsurance.
Here's how reinsurance works. The insurance companies will sell policies to everyday consumers like you and me. But to help them manage their risk, the insurance companies will buy their own insurance. And this is called reinsurance. But if these reinsurance companies pay out more than they expected, they will have to raise their rates for the insurance companies, which could eventually trickle down to everyday consumers like you and me.
We have seen that. I mean, that does happen where you've got, losses that happen globally that are greater than had been projected in a year.
Cocking says we could also see higher prices for building materials like lumber and shingles, as the demand will likely increase with all the homes that will need to be rebuilt after the fires.
You think on top of that, we're still rebuilding in areas like North Carolina and other parts along the coast that dealt with the hurricanes last year.
Now, when it comes to those reinsurance rates I mentioned earlier, a lot of those companies are global. So if we do see fewer natural disasters in other parts of the world, these companies may not have to raise their rates. But insurance experts say the trend has been for more natural disasters in recent years. So we will have to wait and see. Back to you.
All right. Thank you, Gordon.